How we doing, guys? So we're going to be talking about how to find your edge in the market, and I think this is a very important topic that many traders need to hear because lots of traders out there are struggling, and they may not know if it's due to their technical edge or their psychological edge. And in many cases, it's actually their technical edge. Even though I like to talk about psychology and focus on psychology on this channel, I do think there's instances where traders actually do lack a technical edge in the markets. And there's several reasons for that. It may not be that the edge itself is not working. It may be that the trader's personality doesn't mesh with that edge. They may see other traders doing it successfully and, following their same strategy, and it just doesn't work for them. So we're going to be talking about that and why that is, and kind of talk about how you can find your personal edge in the market based off your own personality and your style as a trader. So let's dive right into what you need to be looking at first of all. And the first thing you need to look at is which market you're going to trade. So this is obviously important. You need to pick which market you're going to stick to. I highly suggest choosing one market, especially if you're starting out or if you're not profitable yet. It really doesn't do you any good to focus on multiple markets and constantly jump from different market to different market or different strategy to different strategy. Focus on one market, focus on one strategy, so you can kind of test it out and see if it works for you, and do that one at a time to kind of build some confidence in a strategy that ends up working for you eventually. So let's say you dive into we'll just use small caps for an example. Many traders jump into small cap market because simply they see other traders doing it and making a lot of money, right? So just because you see other traders doing well in a specific market and you like that market and you find it appealing, that does not mean you're going to be successful in that market, and it doesn't mean it's the right market for you. So you need to test it out first, try it out for a few months. If you're not getting the results you want, if you're finding you're losing money, you need to figure out first of all, are you losing money because of the edge itself, or are you losing money because you're not performing and doing what you need to be doing in order to make money? In other words, you're not following that edge and you're emotionally trading. So if the case is that the edge is working, the edge works fine, and it's you that's the problem, then that's a totally different story. And I have plenty of videos that cover that psychological edge and talk about how to fix your mental edge. But in this case, if your edge does not work, well, then you need to find another edge. You need to find something that does work for you, right? So let's say you jump into the market, you chose small caps. Now you need to choose what time frame trader you're going to be. Are you going to be a scalper, or are you going to be a trend trader? Are you going to be swing trading? This is where you need to experiment and see what works for you. So just because you like scalping or you like trend trading or you like swing trading, that doesn't mean they're going to work for you. What you need to do is see where your skills excel and focus on that specific niche or time frame. So if you're better at thinking quickly and you're a very impatient person, scalping is probably going to do you better in terms of results, because you're going to be able to make quick decisions. You're taking very quick volatile moves and you're getting in and out of positions very quick. That's probably going to suit your personality more, and you're probably going to be able to stick with that strategy more consistently over the long run because it meshes with your personality and your style. Now, if you're more of a trend trader, you're more of a patient person, you don't like the volatile action, or you're not comfortable with that volatility, you like the more slower moving action, and you're probably going to do better as a trend trader. Even if you prefer scalping, that is your personality. If your personality is that way, if you're more patient, you're kind of not very comfortable with the volatility, the volatile moves of momentum, then you're probably going to be better off looking at those slower moving trends and joining in. Now there's also reversal traders where you can try to find tops and bottoms. This is a very popular method of trading, and you need to find out what kind of strategy you're going to be using with your time frame. So whether you're a scalper, trend trader, or swing trader, you need to find out what strategy is going to work best for you. And the way you do that is by experimenting again. So you test out different strategies. You look at, say, reversals. You'll try out reversals, say trying to find the top, bottom. Say reversals don't work out too well for you. You try to find the top and you find yourself getting blown up most of the time. The stock keeps ripping. Or you try to catch the bottom and the stock just knifes on you and just keeps going down. That's probably an indication that you're probably not very good at finding the tops and bottoms and reversals. So what can you try next is probably joining the trend, right? So try joining the trend. If it's going up the stock, look for pullbacks to get long. If the stock's going down, look for pullbacks to get short. So there's many different styles and strategies to trade, and you need to kind of find what best suits you as a trader. Now, there's also patterns in the market. So chart patterns are very powerful and very simple. You can look at your bull flags, bear flags. You can look at your pennants, your wedges. Those are some of the most basic patterns. And, I personally love trading, wedges. I don't really like to trade bull flags as much anymore. Breakouts, it just doesn't work for me. And, I find often, most times that I'm buying breakouts, I'm just not good at it. And I end up, buying the top, or, I'm just not comfortable with buying those breakouts anymore. So, in the past I was, and markets change, things change, and this is another very important point. The market is never going to stay the same. So you have to constantly adapt your strategy to the current market environment. Now, if we're looking at, for example, small caps, we know that they go in cycles. We know they have hot market cycles and slower market cycles. Now, in a hot market cycle, if you're going long, you're probably making a ton of money because everything you buy goes up, right? So pretty much you can buy anything and it goes up, 100% on the day. That's a hot market cycle. Now, this doesn't work if you're trading a slower market cycle where breakouts are constantly failing, short sellers have the edge, and everything is just failing and going down. That's not going to be a good market if you're a long bias trader, especially a breakout trader. So you might want to think about maybe going to dip buying instead of breakout buying in those certain market environments. And as a short seller, if you're trading in a hot market, trying to find the top is a death sentence. So you can get blown out very, very easily. You can think you're getting in on the top, and then it can rip another 50% on you. So it's very important to recognize the market cycle you're in and make adjustments there based off your current strategy in order to accommodate the current market environment. Now, I know some traders that are fantastic at, guessing the front side of the move, shorting in the front side, and they're really good at that. Me personally, that's how I used to trade small caps, and I enjoyed doing it, and I was fairly good at it. Of course, you're not going to win all the time. You're going to take losses, but I was fairly good at it because I had good risk management. I understood the risk of the stock continuing to go higher, and I was fairly good at reading price action and the tape. And that is very important specifically when trading momentum. So if you're trading the trend, you don't really have to worry too much about things like tape reading and level 2. You're kind of just joining the chart, and, you're plotting out your trend lines, and you're focused more on the technical side, not really the tape and the price action. But when you're trading momentum, price action is pretty much king. It's going to tell you what's happening in the moment. And that's what you need to know when you're trading momentum. You need to know what is happening right there and then in order to make your quick decision. If you're going to get long, if you're going to get short, if you're going to sit on your hands, those are what you need. Those are the skills that you need in order to make those decisions. So for someone who's more slower thinking and they're not really comfortable with that, they're probably not going to do very well in momentum trading because it's very fast paced and you have to make quick decisions. So if you're one of those people that's more patient and more just slower thinking, I don't recommend you trying to trade momentum or scalp because it's probably not going to work out for you. If you're one of those faster thinkers and you're trying to join the trend, it's probably not going to work out for you either because, I can tell you guys from my personal experience, being a scalper most of my career, trying to join the trend is agonizing because I just do not have the patience to, sit in the position all day or watch the screens all day. I like to get in and out, take my profits, try to take the meat of the move. I'm always going to leave money on the table. I know that because I'm a scalper. But I don't care about grabbing the entire move for the day. If you're someone who wants to capture the entire move or the bulk of the move for the day, that's totally fine. If you're comfortable with sitting on your hands and waiting for trades and sitting in positions and letting them work all day, that's great. That's fantastic. If that works for you, do it. But if you're a trader who's impatient, like I'd consider myself impatient and more of a scalper, it's not going to work for you because, you're going against your biology and your psychology. Your mind is telling you, hey, I don't want to be sitting in this position all day. let's do something, to get, to get the blood flowing or something, because you're going to do stupid things to get out of that boredom, right? So, I find scalpers specifically, they constantly need to be in positions and have some action, and that's their style of trading. That is their mental edge, constantly being in trades, and that works for them. But as a trend trader, they're much more patient. They sit on their hands all day. They'll wait for that perfect entry, and then once they get in that perfect entry, they let the trade work all day because they have the patience to, and that's their personality. It works for them. So a great analogy I like to use is trying to fit a square peg into a round hole. That's essentially what you're doing when you're trying to trade someone else's strategy, or trying a strategy that doesn't really mesh with you, but you want to learn that strategy, you want to trade that strategy because you see others doing it. Doesn't mean it's going to work for you guys. You got to find what works for you, and that is the secret sauce. That is the holy grail. There's no holy grail strategy out there for one person. The holy grail is a strategy that meshes with your personality. It works. It's proven to work. If you've back tested it, it can produce at least 60% win rate. If you're winning 60% or more, you're doing fantastic as a trader. You can't be going for this 90-95% win rate and expect realistic results like that. And if someone tells you there's a strategy that can win 95% of the time, they're probably full of BS. So you want to find a strategy that pays you at least 60% of the time. That's a very good strategy. And when it comes down to it, your strategy is just one part of the equation. It's the risk management that's going to determine how much money you make in the long run. So, I know traders with a 40% win rate that make tremendous amount of money. We're talking 7-8 figures a year. And the reason for that is they cut their losers very quick, and they let their winners ride, and they let their winners turn into monster trades. So if you're going for bigger wins in the market, generally speaking, you're going to have a lower win rate, right? That's just common sense, because you're holding a position for a longer period. The odds of it going in your favor for extended periods of time, the longer you're in the position, the lower the odds are of it continuing in your favor. So it's very important to realize that and understand and be okay with that if that's the kind of trades you want to be going for. And if you're a scalper, you're going to naturally have a higher win rate than, say, a trend trader, because you're getting in and out of positions very quickly. You're minimizing your risk, you're minimizing your exposure in the market, so you're getting in and out, and that in turn is going to have you have quite a high win rate. So the trade-off is lower risk reward. So your losses are going to probably be roughly the same or slightly smaller than your wins, but your wins are not going to be much bigger than your losses. And that is why you need that higher win rate. So kind of find what the balance is for you. Maybe you like to have a higher win rate, and that's totally fine. I totally get that. It gives you confidence to be, winning more than you're losing, or winning more frequently than you're losing. That gives a trader confidence, and it's great to have. But there's also a downside to having a high win rate. And this is something not many traders talk about. And this is overconfidence, right? How many times do you have, you have a strategy that works for you? You're making money, you're doing great, you make money one week, you're up, you're green 2 weeks in a row, and then something happens. One day you just lose control and you just get, completely reckless, and you blow your account. Now, this is not the strategy's fault. I'm not saying that because you have a high win rate, you're going to blow up. But what I'm saying is having high win rates can actually have a psychological negative impact on your trading. And the reason for this is your mind gets accustomed to winning and being right so frequently that once a loss happens, and it will happen, of course it will happen, it's trading, you're going to lose eventually. So once that loss does happen, it's very important how you manage that trade, because your mind is not in a good state to be managing a loss at this point when it's so used to winning all the time, right? And this is kind of why I personally found I like to have a lower win rate. I purposely choose to have a lower win rate because of this reason alone, because I know that if I'm winning all the time, I am very prone to getting reckless and getting way too confident, and I can, I'll take double, triple my risk because I get so confident if I'm winning, say, 2-3 weeks, green weeks in a row. that gives me too much confidence. And that is why I like to have a happy balance between, wins and losses. I don't mind being red on the day. I'm totally okay with it. In fact, it's actually good for my trading and my personality as a trader. And this is stuff you need to figure out along the way, what works for you. So I do see a lot of traders tend to focus on the higher win rate. And if you're listening to this and this sounds like you, this may be something you need to think about in terms of your strategy. Maybe this high win rate is not so good for your trading, right? See how it actually impacts your long-term results. Are you the type of trader that has a high win rate and then ends up giving it all back in one day? That's probably an indicator that you should probably think about switching up your strategy, maybe try a lower win rate strategy so you can get better at managing your losses and managing that risk. But these are just little things that you can look at in terms of finding your edge in the market. And at the end of the day, it's about finding a strategy that not only works in the market, but it works for you and it works with you. That is the key. That is the holy grail. If you want consistent long-term results, you not only need a strategy that works, that strategy needs to be able to work with you instead of against you. So if you're constantly getting into a position and feeling uncomfortable all the time, or feeling like, hey, this isn't working for me, it's probably a good indicator to try something else. That's not going to be sustainable for you in the long term. Even when you see other traders, trading that same strategy and they're profiting, that does not mean it's going to work for you. You have to realize this. So to quickly recap, first thing you need to do is find the market you're interested in. Second thing is you need to find the time frames you're going to be trading. What time frames work best for your style and your personality? Are you going to be a scalper, trend trader, swing trader, whatever it is that works best for you? And third, you need a strategy. So what kind of strategy are you going to be trading? Are you going to be a reversal trader? Are you going to be joining the trend? Are you going to be buying breakouts? These are the things you need to figure out. And once you have all those compiled, you'll eventually find your edge. The only other thing you need is to be able to control yourself. So that is the psychological edge that I've talked about in my previous videos. So once you have those two things, that is the holy grail. You got your personal edge that works for you, and you have that self-control that allows you to execute your edge without any errors, without any emotion, and you're able to follow your plan perfectly every single trading day. So hopefully this talk helped you guys out, and if it did, I'd appreciate it if you leave a like, and we'll see you in the next one. All right, guys, cheers.